There are some things I'll take a chance on, but life is already enough of a gamble for me to put my whole nest egg in the share market. So I take a calmer path. By investing in private credit, I know my money could be growing, not yo-yoing.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, and welcome to the COB. I'm Nadine Blaney, and from all of the crew and team here at AusBiz, we hope you had a good trading day. The local market, well, it's off the lows of the day, we can say that. Well off the lows of the day, in fact, just into negative territory. That's the CIBO Australia Index. It is now closed. The S&P ASX 200 is closing as well. So it is sitting at, 8,000. Let me get this specific, 8,852. So off by pretty close to 0.2%. So underperforming some regional markets. We've got the Hang Seng up by about 0.2%, just past 4 p.m. here in Sydney. And we have seen U.S. futures pick themselves up as this session went on today. So NASDAQ, after hitting that record high on Friday, yet again, early indications are that it will be a positive start to the session in New York. However, plenty of water to go under the bridge between now and then. We'll bring you across what you need to know today. And part of what happened today was a data dump coming from China. And guess what? It's a China slump. Chinese factory output growth hit its lowest level in a year. Retail sales also slumped, so proving and pointing toward domestic weakness there. Unemployment in China also continues to tick up. So we're looking at a pretty sharp slowdown in the world's second largest economy, I should say. And it looks as if things could get worse. So we'll be keeping an eye on China and the impact that will have on growth predictions here. It looks as if they might even miss their growth target. Now, elsewhere though, there has been such a focus on gold as of late, and for good reason. I had a really great chat with Todd Warren from Tribeca Investment Partners earlier today. You can find that online if you so desire. I also think it might be in the COB newsletter tonight if you're looking for a quick link. But I bring gold up because we have seen gold miners falling to an almost 2-month low as we saw bullion prices, so gold prices slump as well. And clear cut, question mark? Well, that's what we're all asking when it comes to the FOMC, 25 basis points or 50 basis points. We've also got the Bank of Canada, the Bank of England, and the Bank of Japan meeting this week, though no cut is expected there. So let's take a look at this market in terms of sectors. We did see a bit of weight being put on this market by some of the heavyweights, including BHP and Rio Tinto. BHP executives apparently were speaking in Melbourne today. I was reading a report on Refinitiv talking about copper, and again, copper and the increasing exposure that these big miners want to copper came up in that conversation with Todd Warren. You'll want to listen to that interview for his preferred pick in the space. We also had a bit of a chat around lithium miners as well. And guess what? The best performer on the 200 was today. Not a gold miner, but a lithium miner. Evolution there down by 3.6% to $9.53. Banks, so the stock of the day was ANZ. We'll get you across the details in just a tick. But a bit of a mixed picture here, as you can see, with Westpac up by 1%, NAB nearly up by 1% as well, while CBA and ANZ and Macquarie were lower. Healthcare also getting hit. CSL came up on today's edition of the call. Today's edition of the call was something special. It was a closer look at the winners and the losers from reporting season and how they are performing in September. To get an indication of whether or not they're buy, hold, sell, of course, you can find that episode of the call online, ausbiz.com.au, if you're listening to this as a podcast. All right, let's get you across some of the top corporate news. And ANZ, just briefly, it's falling on that $240 million penalty over bond trading and customer violations. AMP has risen on settling some class action proceedings. WiseTech Global also up as we saw Richard White even selling off some of his stake. WiseTech featured on the call today as well. Lovisa has fallen. It is one of the companies trading ex-dividend today. Also, Gold Road Resources, it downgraded its production guidance. We knew that it was having production problems at its Gruyere mine, but yeah, got the numbers around that in terms of production today. All right, I could go on. However, let's take a pause. Let's chat with Josh Gilbert, who's joining us from eToro. Josh, nice to see you on this Monday afternoon. What do you make of today's trade? You know, still negative, but well off the lows of the session.
Yeah, great to be here, Nadine. Yeah, a bit of a, I guess, lackluster day of, trade really, and I think, that sort of move that we've seen towards the end of the session to sort of come back off of those lows. I think that a bit of a lackluster trade, I think, given the fact that we've got a pretty big week coming from the Fed, and we've obviously got jobs data here locally as well. And it was maybe a bit of surprise to see markets open lower, especially after, we saw markets in the US close at record highs on Friday. So that was a bit of a surprise. So I think that we did see a little bit of buying coming through towards that end of the session, a bit of strength in tech like WiseTech you mentioned there, GYG having a good day as well. So, I think some broad-based weakness, but, a few names sort of, really lifting us today.
Yeah, okay. And it was interesting that GYG was trading ex-div and it still rose, even though it, really suffered in the wake of reporting season. So what is moving markets this week? I mean, can I state the obvious, the Fed pulling a lot of focus, but arguably a 25 basis point cut is not going to take anybody by surprise.
No, exactly that, right? And I think the maybe the focus here is going to be more on the commentary and that dot plot that we're going to get. So obviously we're going to get that sort of forecast coming through from those Fed officials, likely to probably show that we're going to get another cut this year, and then obviously potentially shifting even lower rates into 2026. I think one of the risks that we get from the event this week is that there's a small expectation that we may get a 50 basis point cut. Could happen, right? We saw the Fed do that last year. They surprised us with that 50 basis point cut. Wasn't something that the market expected. It doesn't feel as likely now that we're going to get that, but certainly still on the table. I think what would be probably more likely is that we get a 25 basis point cut, and then maybe that a dot plot could show that we have 2 cuts by year end, or markets begin to sort of price in 2 cuts by year end. I think that's the sort of the bullish outcome. The other side of that is that we actually don't get too much of a dovish Fed, right? They sort of struggle to sort of really deliver more than what the market is anticipating, because as you say, that 25 basis points pretty much guaranteed. Markets have already priced it in. So I think now it's that expectation of getting that sort of dovish take, and if we don't get that, then that's when I think that the markets could fall, and ultimately land on the back foot a little bit. So that's what we're going to be looking towards, that outlook, that commentary. And if we don't get that sort of dovish tone, then I think markets will be disappointed.
Okay. So risk event there, risk event with other major central banks. But I'd like to just change tack. Is there momentum behind Bitcoin? I know that it's moved higher in the Asian session today.
Yeah, I think it comes back to that growing expectation of, the Fed coming through, and this, again, expectation that we are going to see, a bit more of a dovish Fed coming through. And I think what's really important, we've still got, record numbers of, capital sat on the sidelines, right? Over $7 trillion, sat in sort of money markets. And I think that's massive when we begin to get rate cuts, and that feeds into something like crypto, where it's clearly known as that sort of higher risk asset. And if we look at that institutionalization of the asset this year, the Bitcoin ETF, the iShares ETF, seen over $20 billion in inflows this year. That's sort of the 4th highest ETF in terms of inflows, which is massive, right? When we think about it's only just sort of behind like the world ETFs and the S&P 500. So clearly becoming a bigger part of investors' portfolio, becoming a legitimate component in those diversified portfolios. And I think what we're sort of really looking towards is not just sort of obviously that Fed rate cut, we're looking towards, those ETF inflows continuing, broader adoption. We're seeing that a lot more, even if we think about some of the IPOs that we've seen in recent months on Wall Street, probably 2 or 3. Circle was a big one, soared on its debut. Bullish also soared on debut as well. So really we're seeing that broad investor interest in the asset that's helping Bitcoin sort of lift higher. So I think for us, when we're looking at Bitcoin at the moment, that cut is certainly going to help, but that is priced in. If we get that dovish tone, I think we'll see capital flowing into Bitcoin. And I think by year end, if we do get a more dovish Fed, then, as I say, if we do get 2 cuts, I certainly think we'll be moving back towards all-time highs before the end of the year.
Yeah, all right. Well, we'll keep an eye out for that. Look, this is going back a bit, but what did you make, Josh, of Apple's launch last week? I mean, did that sort of go any way to quell the fears that Apple's best days might be behind it?
I think it was mixed, to be honest. Look, I think the iPhone Air was, I think, one of its more bold moves that we've seen in recent years, probably one of the biggest changes that we've seen to the iPhone in many, many years. For a long time, Apple has had this really great knack of, giving us small upgrades, and you're sort of stuck in that cycle of needing to upgrade, right? They obviously have such a great ecosystem that once you're in, and that sort of upgrade cycle that comes, really every couple of years now for the sort of average consumer. It might be a little change to the camera, it might be something small, but it allows you to sort of upgrade. I don't think there was anything really overwhelming that came from the launch, and I think the market was a little bit disappointed by that. I think really the big question mark remains over AI. If we look at the Magnificent 7, it's lagged it over the last 12 months, and over the last 2 years, it's the worst performer in the last 12 months against that Mag 7. And I think it just simply comes back to the fact that they haven't really been there on AI, right? I think big tech are really sprinting ahead, whereas it feels like Apple is barely out of the blocks when it comes to that strategy. So I think we wanted a bit more. Yes, we had an announcement around the AirPods, which was, it looks like an amazing feature, where that translation feature coming through. Those types of things, that's what we want to see from Apple, and I don't think we've had enough of that yet. We didn't get enough on-device features coming from AI. We didn't get enough of a roadmap and a road plan, and I think until we get that, shares are going to struggle a little bit, because, as I say, those releases and those product updates for the iPhone, they weren't anything exciting. We also wanted maybe something like a foldable iPhone, which Samsung has obviously been doing for many, many years. But I think, look, let's be clear, this is, one of the best businesses that we know in the world. In terms of the product upgrade cycle that we have, that's going to sort of continue. But in terms of really getting back to double-digit revenue growth, I think we need to see more AI, or sort of like on-device AI updates. And I think that's when we will see Apple sort of start to sort of win again, especially against big tech.
Yeah, got it. Now, Josh, not to overlook what's happening here locally, we do have some jobs data. Is that sort of the biggest risk event on the horizon here locally?
Yeah, it's a pretty quiet week, I think, from the sort of macro front and also from a corporate perspective as well. So I think we'll probably be looking to those jobs numbers. Whether we get anything, particular or particularly interesting from that changes the RBA's, moves, I don't think so. Obviously edged down to 4.2% in July, expecting this month to sort of see jobs numbers staying at 4.2%, about 20,000 job additions as well. But I don't think it's going to sort of really move the needle for, the RBA in September. I think we'll probably see them sort of stay on hold. The inflation numbers probably going to be that big one. That quarterly inflation print is what we're going to be looking towards. I think is probably the key move next. Obviously, we've seen the Aussie dollar pick up a little bit today on the expectation that the Fed will obviously cut more than the RBA, and that's obviously seen a bit of weakness in the US dollar. So I think that when we're looking at that employment numbers, is it going to move the dial? Like I say, I don't think so, but it's, again, a key insight, and it could give us a bit of a better idea of what we can expect from the RBA, and whether we get that cut in November that markets are pricing in at the moment. All
right, we'll be hearing from a few of the assistant governors at the RBA, starting with Sarah Hunter tomorrow at the 2025 AFIA conference at 9:50 a.m. Josh, thanks for joining us, getting us started this week. I hope you have a good trading week.
Thanks, Aideen. Have a great one.
Take care, Josh. All right, let's get across our stock of the day, which was ANZ. David Lane from Ords, Kai Chen from MPC Markets. Here's what they had to say.
Not good conduct. So, I mean, And then also there's so much negative headwind where they're laying off about 3,000 staff across the board to streamline their operations. So it raises the question, are the high valuation for banks justified? I think there's a big question mark. In my personal opinion, some of the banks are probably overvalued.
And that would be ANZ as well?
Yes.
Would you be selling?
Yes.
ANZ will have their strategic day on the 13th of October. And I think that will be the day when analysts and the market will start to get a little bit more clarity on where ANZ goes in the future. Analysts will be asking questions about their capital position, about how they're going to be treating dividends in the future, and as I said, how they treat acquisitions like Suncorp and how this restructure impacts that. So at the moment, we've got a hold recommendation on it. I think that there could be value in it in the future, but not quite at the moment. So definitely keep an eye out for that strategic day on the 13th of October, and we might get a little bit more clarity from it from ANZ then.
October 13th, we've got that in the diary. Will be interesting to watch ANZ trade ahead of that. Now, let's get ahead cross-market leaders today. Pilbara looking good, up by 9.3% by the end of this session. Boss Energy as well. IDP Education on the list. We discussed that on today's episode of The Call. Lifestyle. And also AMP on that settlement coming through from the insurers. Now, some of the laggards are Evolution Mining, so in the gold space, Capricorn as well, HMC Capital, Regis Resources, and Chorus. Regis Resources, yeah, it's presenting at the Denver Gold Forum today, but just being weighed upon by that gold price overall. Let's see if we see some of that in the small cap space. Pacific Edge up by close to 28%, and Terry's Technologies up by 12% to $8.10. And Imitemp, I don't know if there was a announcement coming from Imitemp, but yeah, doing quite well today. No news that I can see, up by 12% to 26 cents per share. Looking at some of those that did not perform, Alterity Therapeutics down by about 12% to just 1 cent per share, and African Gold Resources off by 10.3% to 28 cents per share. Tonight, not much. We will get the bulk of the data and the decisions coming later this week, but tonight we do get that EU trade balance. Tomorrow, as I was mentioning, RBA Assistant Governor Sarah Hunter is speaking at the AFIA conference. Also, we've got Qantas and Duratec trading ex-dividend. I mean, there's others, but those are some of the bigger ones to mention. Here we go. Let's find out what the final figures are. That's the CIBO Australia Index. The S&P ASX 200 closed at 8,853, down by about 0.1%. So really mirror image for what you're seeing on your screen right now. So tonight, look, we will be watching what happens in terms of geopolitics. We've got U.S. Democrats pressing the Trump administration to make China curb structural overproduction. So, yeah, trying to, I guess, get Beijing to change tack in terms of their economic growth model. Treasury Secretary Scott Bessent, of course, is holding talks with Chinese officials on the trade front in Spain. And it comes as, again, we saw the Chinese economy slumping in August. So yeah, doubt when it comes to that growth target. And yeah, just we'll be watching those headlines coming from that meeting in Spain between the U.S. Treasury Secretary on trade. So something that we'll have to talk about. Yeah, so there's a bit of hesitation out there in markets right now. Stay with us if you'd like to see some of our best interviews from the day. You can catch up with anything you may have missed online. And we really do look forward to seeing you tomorrow when we're live from 9:45. Whoops, there's that earring again. Been happening all day. Have a good one.
The COB is brought to you by Montgomery Investment Management. The world is volatile. Your financial future doesn't have to be. Find out more at montinvest.com.